effective as humanly possible, right? So as I said, I'm going to be recording this session. So we want the sessions to be as effective and useful as humanly possible. Okay, it's not just about us coming in and just drawing squiggly lines up and down and then be like, okay, yeah, the market did this week. We want to actually help guys get into the groove of making sure that every single day, right, every single day, this whole thing works for them in that they are learning to do things by themselves. Okay, so every single day this should become a bit easier, right? You won't be able to master it overnight, but you will be able to make a lot of progress on a day-to-day basis just by simply making sure that you internalize all of the lessons that we actually do here. Right? So if you do have any market that you want us to take a look at as well, you may let me know, okay, and then we'll get to it towards the end of the session. We'll squeeze it right at the end. But for now, we're just going to be looking at most of the majors, or probably all the majors that we usually look at, and just take it from there. Okay. My platform is a bit messed up in that I don't have a lot of the markets that I usually look at, but let's sort that out for a moment. Okay, cool. Right, we're starting off with our first one, which is the euro dollar. Okay, now if we're looking at larger terms, what we usually look for obviously is what directional bias do we hold for the market in the long term. Right, so long term, if you're looking at the euro dollar on the daily time frame, we can see the market popped above 11.50. Okay, so $11.50, that's where the market popped above to make that peak high. Okay, let me just get the spotlight. Boom, right. So 111.50 market popped above there, and then popped above there towards just at the beginning of this month, right? So it came close to that previous month's high. Okay, I was hoping for a tag at 112 at least, if you guys remember that one, but we didn't actually get that one. That would have been a solid one, right? Because we'd have a few things that actually came into play we've been waiting for, right? You can see 112 was a previous solid market structure, and from our analysis, we had established that if the market does reach that 112 level, we are likely to see a decline. Okay? So without making things too complicated, we would like to see the market pop right as we have established that we're looking for predominantly long-term, a short bias. Okay? Now we can see this previous swing low over here, which is the low of, I think it's like 2 weeks ago, the week of the 28th of October. And if we drop our horizontal line, we can see the actual price is 1071. Okay, I'd love to see the market pull up to that 1071 level. Okay, pull up to 1071 and pull that down. Okay, extending to the lower levels and continuing this move to the downside, right? So it'll probably be at most in this instance, I'd re-look at the market after it reaches that 110 level. So that would definitely be an area that I would have a lot of interest in. Okay, so from that 1071 to that 110 even zone. Okay, all right. So that would be probably where I re-evaluate the market. If it's still going in that direction, certainly we'll be keeping that for a much longer duration. Okay. To around 109.10. Okay, so it is 109.01. Right, so that would be the entire move in and of itself. So if you're looking at obviously entries and exits, no more than 50 or 60 pip in terms of stop loss and anything like that, with a take profit of at most probably about 160, 170 pips, which has a really good risk reward ratio, at least 3 times more than what we will be risking for this particular setup. So that's a really decent risk reward ratio that we actually have there. Okay, so also a higher probability to trade setup due to the actual structure itself. So let's wait on that one. Let's see how it develops during the course of the week, and then definitely worth keeping an eye on. And now, one of the markets that I have been interested in quite recently is the GBP/USD. If you guys remember in the group quite a while back, we did mention that there was some developments, obviously, with Brexit. There was some news, especially in October, that we were expecting to come into terms with, and then obviously from there, we'd start trading the markets after October. But obviously, it still seems like there's going to be a lot of volatility within the pound pairs, and therefore we're going to really keep a close eye on. So if you have to trade, okay, if you prefer trading like GDP, right, some people do that because it provides a lot of opportunities and it's very volatile and it's very aggressive in the movement, and obviously people will directly translate that to a more profitable currency than most others. So if that's your thing, then certainly I'd be looking at, in terms of the daily time frame, I'd like to see the market push up at least to the upside, coming to around the 3110 zone, okay, to around 3100, and then from there we'll be able to see what the market does. Okay. However, right now, short term, see that 2900 level. Okay, the market rejected quite nicely at the 2900 level. I don't see much else at that area besides just the actual zone itself, right? So I'd really like to see something push back up again, right? Even if it's about 5 or 10 pips above this 2900 zone before I consider an opportunity to short. Right? Definitely short would go in through to around the 2700 zone. Okay, at 2700, I'd be looking to just get out or clear all profits, because in terms of the entire move, that is about 100 and 200 pips plus minus. Okay, so also you'll be looking at a 50 pip stop loss, right, and 200 pip take profit in total. You'd look at a 1:4 risk reward ratio. Okay, so you'd be risking $10 to make $40. Okay, so that's also a really good trade setup, right? Probability is a bit high as well. Okay, not as high as Euro USD, but definitely know that the market does do its thing. And if you're looking at the USD JPY, right, we've been looking at the USD JPY for quite a while, okay, and it just refuses to break out in any significant direction. We're expecting a bit of a break to the upside, okay, break to the upside just above that 109 zone. Okay, we did actually get that. Okay, right, we got that 109 zone. Just trying to make sure if this is the latest update. Okay, from there we go. And we're expecting that to pull back in, okay, to 109 even, right, where the market actually is now. So I'd like to see somewhat of a rejection at that price level. So if we do get a decent enough rejection, although I didn't really like the way that the market pulled back into that zone, right, but the trade does still look valid, okay, because we didn't have any aggressive candles closing below the price. Okay, so if you go to the daily time frame, okay, let's remove the Fibonacci just so you can have a clearer picture. Okay, by removing the Fibonacci, you can see this previous market structure, this high over here. I was hoping for the market to break above, right, and we're expecting the market to reject at 10900 before we take the market going low to at least, I think it was 110 even, and about 110.50. Okay, so in total, also that's a pretty significant amount of pips. Okay, from that price to that's about 100 pips, and that's about 150 pips. So definitely go to that 110.50 zone. Also risking about 50 pips or so. That will give us a 1:3 risk reward ratio. Okay, but I'd definitely like to see a pin to the moving average. I'm not sure which time frame it would be. But probably on the 1 hour time frame, I'd like to see the market bounce off the moving average at least, just to add that layer of increased probability of the trade working out. Okay, so that would be the bias on the USD JPY. I mean, I can't see anything but that at this present moment, right? I can't see the short right now because the market already broke above the 200 moving average on the daily time frame. Okay, so I'm not looking at any shorts. If the market does, let's say for whatever reason decide to break lower, it would have to close below that 1,800 zone before I consider it a short. Okay. Okay, you guys are with me. Okay. All right, guys. Let's look at the USD CAD. Okay. All right, guys. USD CAD. Okay, sorry about that, guys. I did mention that I have like a 4-year-old here today, so he's actually bothering me by coming inside here and then running around outside to watch cartoons and stuff. So do excuse me, guys. Okay, so let me just grab my spotlight again. Okay, I'm on the daily on the USD CAD. The USD CAD came off these lows, 130.50, right, and just popped above the 3200 zone and tagged the 200 moving average. Okay, as I mentioned before, the USD CAD is one of the more choppy sideways markets, so we don't expect a lot of trending or one directional movement for extended periods of time. So we do have somewhat of a flexible bias when it comes to directional buying or selling. Okay, so if the market gives us a nice buy signal, then we're in. If it gives us a short signal, then we're definitely in as well. So in this instance, we've broken a previous week's high. Okay, so let's just call it 13200. Okay, so that 13200 is a pretty significant zone. Okay, was a nice previous support structure, and the market is coming off these lows, this 30-50 level that we spoke about. I'd love to see the market extend to these upper highs of this trading range at 33.50. Okay, and if we do get that, that means the market has about 150 more pips to actually go on the upside. Okay, so if we do get that, I'd like to see the market reject at 3,200, probably extend down to these lower levels because these look like more solid lows. Okay, this 31.95 zone, probably a pin to those lower levels. I'd definitely consider a buy on the USD CAD around that area. So if we do get that, extension to about 33.50 gives us a 150 pip take profit and a 50 pip stop loss. So also pretty decent looking risk reward ratio. And on the USD, that's basically on the USD CAD, guys. And just keep an eye on that one. Okay, I don't usually do Euro CAD. Also, Euro GBP is not one of the markets that we usually look at. But we do have some choppy sideways movement on it. Okay, if you're looking at the daily time frame, because the only reason I'm doing it now is because someone asked me to look at it. We had this break at 800 rather, and the market just rebounded at 8600. That's about 200 pip drop, and just is continuing to move sideways. Okay, it's an analogy that we usually talk about. If a person jumps out let's say the 5th floor, the 7th floor, or a 10th floor, or whatever floor building, then it's highly unlikely that they're just gonna get up and then start walking again. Okay. If there is, the higher up they go, right, the longer it might take them to muster up the strength to actually get up and start moving again. So that's the analogy that you can use when it comes to markets that have an aggressive drop or an aggressive rise. Okay, more so in the drop because the drops seem to be a bit more aggressive than the rises, but it works both ways. So we might still see a bit of choppy sideways movement on the Euro GBP. Okay, because this has been going on for let's just say 1 to 3 weeks, right? So it's been 3 weeks. The trading range has actually been very tight. Okay, about 100 pips, and we'd have to see something significant break on the lower levels in order for us to be convinced that there is one directional bias. Okay, so we still might see the market come back up to 86.50, right, and then push down, or we might see the market push back down to this 85.63 level and then push back up again, right? So it's anyone's bet. The only logical thing would be to wait, or the safest option would be to wait for the breakout on the downside, probably below 85.63, and then push back in, boom, right, tag this low, and let the market continue to the downside. That might develop sometime next week. I don't see that happening this week, but obviously we never know with the markets. Okay, I think we've done all of our majors, right? I think all of our majors are done. Do you guys have any questions? Okay. Does anyone need any clarification on any of the markets, or is there any market that you want us to take a look at right now? Because we seem like we have a bit of time. Okay, yes, I'm free.
Today, I would like us to analyze USD.
Which one?
USD.
Okay, let me grab that for you. Okay, I'm pretty sure you can see what I see already on the daily, because we're looking at somewhat of a range in market. Okay, so this is last month's high and this is last month's low. Okay, and the market is probably in between. Okay, that's about 50%. It's actually right in the middle of last month's high and last month's low. So there isn't any sort of trend developing on this one. Okay, but I think what we'd like to see is at least a push to the downside. Okay. Okay. So if we had to trade this particular market, so right, if we had a gun to my head, I'd probably be looking at more on the upper levels than the short side. Okay, simply because the market just came off the lows. The market came off the lows from that 9,700 zone, okay, and we had an aggressive push to the upside. So we might still see some sideways movement, okay, but I'd like to see the market extend higher, which is obviously in line with what the Euro USD bias actually is, which is still continuing to the downside, okay, long term. All right, so that would be the long term view. But for now, I mean, it's not a really good setup. The only area that I'd like, if I had to highlight one area, it would certainly be where the market is hovering around right now. Okay, so this area here, okay, we might see a bit of support at this area, bounce on the 200 moving average. It might not be a lot, but even if you do get a trade signal on the buy side here, right, I wouldn't take it past 99.75. Okay, I definitely wouldn't take it past that because the market isn't trading. It's actually still sideways. It's very choppy. So the best thing you can do if you want to trade it, you can trade the ranges. The market drops down to 97 to 98.50. You look at buy opportunities. If it rises up to around one even, then you might be looking at short opportunity. That would be the safest place to actually trade. Aside from that, you'd have to wait for an actual breakout on either one even on the upside or 98.50 on the downside. Okay. Okay, does that make sense? Yeah, still with me, Humphrey.
Yeah, I understand. That's it.
Okay. But do you have any thoughts on this one? Like, do you have any thoughts on this one? Or
Yeah,
anything in particular where you were looking to do?
I was expecting a downside movement, but I was not sure about it.
You're expecting the bounce back?
Yes. Sorry?
No, I'm saying you were expecting a bounce on the moving average. Is that what you're saying?
Yeah, I thought maybe if let's get on the moving averages, that's when I was gonna buy.
Yeah. No, definitely. I mean, this area that I highlighted with the blue rectangle seems like the only logical place where you'd be looking for a buy opportunity. Definitely does. Aside from that, then nothing there really isn't much after that. So there is a high expectancy from my end the market will reject around this area here and start heading upwards, which is obviously in line with what we've analyzed with the Euro USD as well. As you know, most cases, when the Euro USD is dropping, the USD CHF will then rise. Right? So they have that correlation between themselves. But let's see how the market behaves. If you get that rejection candle on the moving average and in this area over here, then certainly we'll be looking at high opportunities to the upper highs. Okay.
Oh, all right.
Okay. All right, guys. Any other markets you'd like me to take a look at? Okay. All right. So if there's nothing else, I'll be ending off tonight's session here. Remember, tomorrow is advanced class at 7 p.m. Okay. We're starting with trading plans. So tomorrow we do trading plan, and on Thursday we do trading plan. And I'll try and squeeze in as much as humanly possible with regards to the second strategy, which we haven't taken a look at as well. I'll be able to make a plan regarding them. Okay. Right, so hope you guys enjoy the rest of the evening. Let's make it a very profitable trading week. Okay. Remember, guys, it's better to spend at least 45 minutes consistently on your trading each and every single day than to miss 10 days or 5 days and then think you're gonna do anything in one single day, right? Consistency is always the key to improving. So make sure that you put in at least that hour a day in order for you to be able to improve yourself. Okay. So if you missed the session regarding the trading simulator, I will just upload it as it is. Last week we had very terrible audio in the background. Okay, I can't quite remember what the issue was, but there was some audio in the background which I didn't hear during the session, but when we were rendering it, we actually did have. Okay, so I tried by all means to get the audio fixed up, but it doesn't seem like it's going to happen. So I'll upload it as it is, right along with tonight's session, so you can go and take a look at it if you missed any parts of it, and I'll see you guys tomorrow. Okay. Cheers.